Have you ever been there? Standing at a checkout counter, holding two cards that look almost identical, and you've wondered what's really the difference here? Well, today we're going to clear up that confusion around debit and credit cards completely. So, let's dive right in.
So this is the big question, right? And trust me, you're not alone in asking this. So many people have this same doubt. I mean, they look similar, you swipe them in the same machines, but deep down, they work in completely different ways. Chalo, let's break it down and clear up all the confusion, step by step.
All right, let's get right to it. The most important difference. You know what it boils down to? It's one simple question. Whose money are you actually spending? Is it your own money or is it the bank's money? That right there is the key to understanding everything.
Okay, so first up, let's talk about the debit card. The easiest way to think about it is, it's like a direct pipeline to your bank account. Simple. The moment you swipe it, the money is gone, straight from the funds you already have in there. It's your money and you're spending it right now.
So, someone might ask, is it just like paying from my own pocket? And the answer is yes, absolutely. It's exactly like that. If you have, say, 10,000 rupees in your account, you can spend up to 10,000 rupees, not a paisa more. It's that direct, that simple.
And now, let's look at the other card, the credit card. Now, here, things are totally different. When you use a credit card, you have to remember you are not spending your own money. The bank is basically giving you a short-term loan for your purchase. It's the classic buy now, pay later deal.
See? This little chart sums it all up perfectly. For a debit card, it's your money and you pay now. Simple. For a credit card, it's the bank's money and you pay later. Just remember this. This one idea is the foundation for everything else we're about to discuss.
So when we say pay later, the next question is, how much later? Well, that's where something called the grace period comes in. You usually get about 30 to 45 days to pay back the money you've spent. And here's the best part. If you pay the entire amount back within this time, you don't have to pay a single rupee of interest. It's basically a free loan for a month.
But, and this is a big but, what happens if you don't repay on time? This is probably the most important question you need to ask yourself before you even think about getting a credit card. It's very easy to spend, but what happens if you can't pay it all back in that 30 to 45-day window? And here's the catch. If you don't clear the full bill on time, the bank starts charging you interest on whatever amount is left. And please remember this. This interest rate is usually very, very high. This is the risk that comes with using borrowed money.
So all of this, paying on time, using the bank's money, it all connects to something super important. How you handle your credit card, whether responsibly or not, directly affects what we can call your financial report card. And in the world of finance, this is known as your credit score.
So what exactly is this credit score? Well, think of it as a number, okay? It usually ranges from 300 to 900. And this number basically tells banks and lenders how trustworthy you are with borrowed money. The higher your score, the better your grades. It shows you're a responsible borrower.
So what's a good score to aim for? Here in India, the magic number is 750 plus. Anything above 750 is considered a really good score. It's like telling all the banks, hey, you can trust me. And this becomes so important later when you want to apply for a big loan, like a home loan or a car loan.
Okay, so we know that 750 plus is the goal. But the big question is, how do you actually build a strong score? How do you improve your financial report card? The good news is, the steps are actually very clear and quite simple.
Chalo, let's go through the 4 golden rules. Number 1, and this is the most important. Always, always pay your credit card bills on time. Second, every card has a spending limit. Stay within that limit. Don't go over it. Third, if you have any other EMIs or loans, make sure you never miss those payments either. And finally, number 4 is really just about putting it all together. Simply use credit responsibly. These small habits, they make a massive difference.
All right, now that you've got the basics of credit and credit scores, let's zoom out a bit. Because this whole idea of borrowing money, it doesn't just apply to credit cards. It's a huge part of the financial world, from big loans to the different kinds of cards you can get.
So when we talk about loans, they're generally of 2 types. First, you have secured loans. These are secured because you give the bank something as collateral, like your house for a home loan or your car for a car loan. If you don't pay, they can take that asset. Then you have unsecured loans, like a personal loan. There's no collateral here, and that is exactly why your credit score becomes so incredibly important for these types of loans.
And wow, just look at how many different kinds of credit cards there are. Once you get comfortable with how they work, you can start looking for a card that fits your lifestyle. You've got cards for rewards points, cards that give you cash back,
cards for travel, for fuel. Seriously, there's a card out there for almost every kind of need.
So, at the end of the day, what's the main takeaway? It really boils down to three simple things. First, spend smart. That means living within your means. Second, build strong. Create a solid financial foundation for your future. And third, and maybe most importantly, stay financially aware. Always be curious and keep learning.
And that's it for our explainer. We've covered the what, the why, and the how of debit and credit cards. Now you have the knowledge and the power is in your hands. So I want you to think about this. Now that you know the basics, what is the very first step you're going to take on your own journey towards financial awareness?